All right, good evening, everybody. It is October 19th, 2022. Give me 1 second, sorry about that. I forgot I still had my music on. Anyway, guys, welcome back to Walks on Wall Street. Good to see everybody. Very, very busy day on Wall Street. Okay, today we heard from Tesla that reported earnings. They actually beat on the top line. They actually beat on the bottom line, but they did miss on that top line revenue growth. So Tesla is down after hours about 6.25%. I think that's going to drag the major equity indices down tomorrow, but we will be doing a deep dive into Tesla's earnings report. Tomorrow, not tonight, because as I was on Tesla's conference call, there was just so much outlandish stuff that was going on, both in a good way and a bad way. And I think I need a day to really sift through the financials to give you guys my most accurate analysis of the report. A couple of crazy things were said on the conference call. I'm not sure if you guys saw, but Elon Musk is claiming that Tesla could potentially one day surpass the valuation of that of Apple and Saudi Aramco combined. So pretty, I would say, powerful statements from Elon Musk. But look, it was a decent quarter overall from what I'm seeing. However, I do want to take a little bit more of a deeper dive through that balance sheet. But tonight we are going to be talking about some housing data. We got a ton of housing data out today. And as you all know, that we've been talking about pretty much throughout the entire week, tomorrow's a big day. We are going to hear from the National Association of Realtors as they release their existing home sales for September. Now, many economists on Wall Street are expecting about 4.7 million homes to be sold. I actually think it's going to come in lower than that. I think this number is going to be really bad. And the reason why I think that is because of last night's stream, right? What did we talk about? We heard from the Wells Fargo Housing Index. That fell off a cliff. We also heard from we got some housing starts data here. That is down about 8%. Housing starts fell to about 1.439 million units last month. And I think that has to do with higher interest rates, right? As of recording this video, the 30-year fixed rate mortgage is trading for right around 7.11%. This time last year was 3%, so I think it's going to kill demand in the housing market. So we'll talk about that and a lot more tonight on the stream. Just let me put away my laptop and we will get on to the street level here in New York. We're starting the stream off from Madison Avenue. It's going to be a cold night. I think it's going to get down into the high 30s. But before we do that, let's see who we have in the chat. I see the one and only. Let's see who we have. Hey, Santa Monica Rodriguez is here. I see Dalton says, hey, Tom, hope you had a nice day. Tone Rick is joining us. Good to see you, Rick. Thank you for being here. I see Julia M. Carson, I see Tracy, I see Savi, and the one and only Dan Zhang. So let's head down to street level. Once again, Tesla did report earnings. They did beat on the profitability segment, but revenues, they fell short. Now, one of I would say the interesting things about this earnings report is that the production capacity in China actually improved rather nicely or quite materially. But tomorrow we are really going to do a deep dive because I think there was just too much craziness that was being said on the earnings report. And I need a day to really sift through the financials and process it. Hey, Mike C, what's up? Says, never hit 70 in my neck of the woods, Florida. That was the first to you guys on that as well. But let's see. Let's get down to street level. Wayne McKay talking about the conference call. Yeah, I mean, I think we're going to talk about that tomorrow. I mean, the conference call was unhinged, I would say. Look, a lot of good things, a lot of things that I just need to dive in a little bit deeper. But look, Elon Musk is Elon Musk. He is a legendary CEO, a legendary entrepreneur, and I don't think that anybody could deny that. But some of the stuff I think that was said on the earnings report was a little bit, I don't know, maybe I'll bite my tongue on that. But if anybody could pull off the goals, I would say, that Tesla is setting, it's definitely Elon Musk. It's definitely Elon Musk. God says, I thought it was his house for a half second. Yeah, no, unfortunately, we are still in the city. Gonna get the train back out to Long Island in about 2 hours after the stream. We are starting off the stream on this very windy night in Manhattan, East 31st Street and Madison Avenue. Dusty Cole is here, good to see you. Monique says maybe arrogant is the word. Yeah, I mean, look, I don't want to be too negative. I never want to be too negative. However, I will say this. There was a lot of questionable things as it relates to the financials that sort of came up. But if we think about the business overall of Tesla, if we talk about manufacturing capacity, I think there was a lot of positive news. At the end of the day, I think that Tesla is one of these companies on Wall Street that is very, very controversial, right? There's even an entire group called the Tesla Q. I'm sure you guys have heard of them, the Tesla Q group, which is a notorious short selling group. And many of them claim that Tesla falsifies their financial reporting, and many claim that the company is going to go to zero. Now, I try not to get involved in those arguments, but I will say this. Everybody that I talk to that's either thinking about buying a car, a vehicle, whatever you want to call it, the first name that pops into their head in the conversation is Tesla. Now, I'm not in the market to get a car, but I've told you guys many times, if I was, it would definitely be a Tesla. And I think Tesla is way, way more than a car company, right? When we've been talking about this for a long, long time on the streams, you could think about the automation, the autonomous vehicles, autonomous driving. You know, I think one of the things that stood out to me on the conference call, but again, we're going to do a deep dive tomorrow, is Elon Musk actually announced that next month they will be delivering the first Tesla sort of, I forget what the name of the truck is, but those big tractor trailers to Pepsi, which is very, very exciting news. But the comments on the call, such as, you know, Tesla could be worth more than Apple and Saudi Aramco combined, I don't know. I think a lot of that stuff is a little bit sketchy. Hey, Jacob O'Brien says we love Teslas. Good to see you, Jacob. I see the one and only Western Mass Dave joining us in the chat tonight. Good to see you. I see Leo. Yes, Leo, you're correct. The semi-truck, which I'm actually pretty excited about that. I think that's going to be really cool. I see RS in the chat. Good to see you, RS. Cindy Foley. Carson says, don't like it when CEOs talk about their market cap goals. Yeah, it's a big unknown curse, I guess, on Wall Street. But at the end of the day, does Elon Musk deserve an exception? I mean, I don't really want to be the person who bets against a genius, right? Because I think, you know, to be fair, if we sort of put our biases aside, I mean, Elon Musk is doing a hell of a lot to change the world, right? To take on climate change, I mean, the guy is just is an operator, right? The guy is a complete operator. Very, very successful engineer. And speaking of the word engineer, here's something that caught my eye or ear on the conference call, which sort of puts things into perspective, right? And I think one of the questions that one of the particular analysts had asked Elon Musk was in relation to the purchase of Twitter. Okay, and here was the question. I'm sort of paraphrasing here. I was sort of in and out of the call. I was so busy today. But the analyst asked Elon Musk, what do you think is going to be the best sort of strategy for incorporating Twitter? Like sort of what type company strategy? Do you want to put everything under one umbrella and manage it as one core competency of a company? Or do you want to sort of split it up in many different subsidiaries? And Elon Musk said, look, we're not investors. He's like, I'm not an investor. I'm not Warren Buffett that buys multiple companies and sort of holds them in a portfolio. He's like, look, we're engineers here at Tesla, right? You could think of our company as a collection of startups and everybody's just working on new innovative ideas. And I think that's actually who you want at the head of a company, right? Because if you look back throughout generations of America, like American history, the best performing companies in relation to their stock price were all led by problem solvers, right? And we talk about this a lot on the live streams that, I always say, I think we should have a lot more engineers in Congress, because engineers, I think there's many engineers watching this live stream, engineers are wired for problem solving, right? Politicians are not. And I think the companies that are going to grow to the biggest and most largest market caps over the next 5 to 10 years are going to be led by the world's best problem solvers. You look at Apple right now, it has the largest market cap. We're actually going to go through Madison Square Park tonight. I'll show you guys the inside, but look at Steve Jobs. He was an innovator. He was a problem solver. All of the best and brightest and greatest companies that fundamentally have changed the way we live are all led by somebody that's solving a problem. So I don't know, that was actually a pretty interesting statement by Elon Musk. He's like, look, I'm not Berkshire Hathaway. I'm not Warren Buffett. We don't have a portfolio of companies and use them as investments. We are individual entrepreneurs and engineers, and we work to solve problems. So I sort of like that answer. Hey, Sabrina Fair is here. Good to see you. Trust you're well. Yeah, Dusty Cole is like, Tom, I hope you dressed warm. It's cold. It's definitely cold out tonight. But the good news is, for all of those who are either New Yorkers or who are going to be in New York this weekend, it's supposed to be 70 degrees. It's gonna feel nice. It's gonna feel really, really nice. Hey, Tariq Khan's is architect/engineer here. Love that. Yeah, I mean, at the end of the day, engineers are problem solvers, right? And I think that, in my opinion, especially as we head into, and we talk about this a lot on the stream as well, what are the thematics for the next decade, right? I know we talk about, valuation metrics and things like that to try to find the best investments on the stream, but I think the number one thing we need to look for is the thematics of the decade. And in my opinion, the top sort of themes for the next decade is EVs, autonomous driving, artificial intelligence, 5G, IoTs, and cybersecurity, right? And I think an operator, and I'm sort of using operator as a descriptive word for a CEO, I think in this day and age, the best operators are going to be engineers, right? Not necessarily the best numbers guys. You want somebody that is very, very driven at solving problems. And I think Elon Musk is that guy. Hey, Rachel Abreu is here. Says, hey, Tom, it's freezing here in Miami, 63 degrees. It's actually pretty freezing for Miami, not gonna lie. It's actually very cold for Miami. Yeah, it was funny. When I went to One of my first times I went to Miami, it got down to like 72 degrees at night. And I was walking downtown Miami and everybody had like North Face jackets on. And I was walking around in shorts and a t-shirt. I was like, geez. So this is Madison Square Park. We are right here at the Shake Shack. A lot of people out tonight. Cold night too. Jay is here, says, hey Tom. JR says, I agree. Always a pleasure to see you. Andy J says, Tom, are you in Central Park? We are not. We are standing right smack dab in the middle of Madison Square Park. And if you look all the way in the distance, this is looking uptown, you could see the Empire State Building. Now, I think last night, the New York Yankees won the series or something like that. I'm not a big baseball guy, but the Empire State Building was all lit up for the Yankee colors, which was kind of cool. Cindy Foley says, love this time of year. But yeah, so tomorrow we will be doing a deep dive into Tesla's earnings report. Again, I really didn't want to, we were going to do it tonight, but the earnings call was so, I don't want to use negative words because it really wasn't like, I think, look, overall it was a good quarter, I think. I would say one of the things that is going to be a long-term headwind, not only for Tesla, but for EV makers in general, right? So you could think Toyota, all the big auto manufacturers, is going to be what we've been talking about in this live stream. And that is I would say the scarcity of lithium, right? I was reading an interesting article in Reuters. I'm gonna have to dig it up and I'll drop it in the Discord, but it says that we need to be building at least 2 times the amount of lithium mining capacity if we want to just meet government expectations for EV adoption, right? And this is something we've been talking about because it's all well and good to really push for EV adoption and say, look, everybody has to own an EV. But I think politicians really do that just to, pander to a base. But they really don't understand that these products and services have to be made and manufactured. And if you don't have the rare earths or the commodities to do so, it's going to be impossible to meet the goal. So I think we really, really need to be watching the lithium markets here. Hey, Dr. Longus is here. Always appreciate your thoughts. Joe says, of Steve Jobs, the exception for the engineer rule, though. Woz couldn't have run Apple like he did. Yeah, that's true. I would say, maybe we could say innovators. Innovators, perhaps. Abdullah is here. Says, hey, nice to see you walking around. Enjoy the walk. Thank you so much. Appreciate it. So we are standing right outside of Italy. So here's something that's concerning me. We did get some housing data today as it relates to mortgage applications, so the volume of people that are applying for a home loan, and that fell off a cliff. It cratered. So home loan applications fell to their lowest level since 1997. The volume of applications for a loan to purchase a home fell to a seasonally adjusted 4% from the week prior. The volume was 38% lower than the same time last year. So 38% lower than the same time last year as it relates to mortgage applications. And this is to be expected. We've been talking about this, but this is sort of a leading indicator at some of the numbers we could see tomorrow, okay? Because tomorrow, the National Association of Realtors is going to be releasing their existing home sales for September, okay? And I think it's gonna come in well below what economists are expecting, in my view. Again, I could be wrong, but if you have more than 100% move in rates year over year, home ownership and affordability is just not even a reality for many Americans anymore. So this is West 24th Street. and Broadway. You know what? We're actually gonna go, let's actually walk down to 14th Street and make a right.
It's 1 block.
Since it's a clear night tonight, I think if we go all the way to the High Line, we'll actually have some really nice views. Now, the wind may pick up, and I don't have the microphone tonight, so if we hear a lot of wind noise, just be cognizant of that. Monique says, how do you recycle lithium? Now, there's a lot of companies out there that specialize in sort of like a full life cycle recycling program. And I've actually worked with a lot of these companies. So for example, in a lot of old devices, you could even say like a smart device, like a smartphone, iPhone, tablets, there's a lot of gold and other components that are either number one, very rare, number two, very expensive. So there's actually companies out there right now that will, go to large companies, right? And let's say if they want to update their technology suite, let's say if they are going to replace all of their corporate-owned iPhones or something like that, they'll go to the company, they'll purchase their old iPhones from them, and then they'll recycle them and use them for the precious metals or the parts. And I think those type of companies are going to really benefit, especially in the coming decade. But I know those companies do exist because I've worked with them before. So they harvest gold out of like smartphones. And I'm not sure, does anybody know if that exists for EVs, like existing EV parts and things like that? Joe says, look up Li-Cycle. So is that company like one of those life cycle management companies where they sort of grind up the old devices and sell the parts, or either just repurpose them for CPO equipment and stuff like that? Jerry says China is working on a tofu-based recycled lithium. Hey, Gail Arnold here. There's a lot of folks out for a nice walk tonight. Thank you for being here, Gail. The LT Prod says recycling does not seem to be profitable. I don't know, I think it can be very profitable. Vonda Howard says, hey Tom and everybody, good to see you. So, all right, let's just do a quick market recap here. And one of the things I always say on the stream is, if we want to know where the market, right, the stock market is going to go, we need to keep our eyes peeled on the debt market. And the bond market really, really sold off hard today. And I'm not liking what I'm seeing. So the 10-year US Treasury yield, I believe, closed at 4.135%, selling off very, very hard, very aggressively. I think this just goes to prove the issues of the illiquid debt market that we're seeing. And we're finally starting to have Fed presidents come around and finally admitting the issue of our illiquid treasury market. And I think if this continues, right, and I think it's at the rate, in my opinion, it is the rate at which the bond market is selling off. So if you really start to see yields spike here uncontrollably day after day, which it seems like we're on that path, I think we could see the bottom fall out of this market. Now, we also talked about usually the leaders or the big mega cap stocks are the last ones to fall. So obviously Tesla reported earnings after the bell, and they're down about 6%. Now, I posted a chart on Twitter. If you guys follow me at Walks Wall Street, I'm gonna cross the street so you guys can see a good view of the Empire State Building. But if you look at a chart of Tesla, it looks like the most egregious head and shoulders topping pattern I have ever seen in my life. Wow, check out this shot of the Empire. This is right on East 20th Street. And this is kind of cool too. So Stanislav says, hey Tom, huge amounts of lithium in war zone in Ukraine. One might argue that is the reason behind Musk's decision to keep Starlink operational in Ukraine. Dude, you took the words right out of my mouth. I said this last night on the live stream. And that's one of the reasons, not to get too political, I really don't like talking about the war in Ukraine. Because with the YouTube algorithm, for some reason, every time we talk about it, we always get these like spam bots. But I think this is one of the main reasons, right? Not to speculate, but I think this is one of the main reasons why Putin is going so hard in this Ukrainian-Russian war. Because there is an abundance of lithium there. And again, as we're talking about thematics going over the next 10 years, EVs, AI, machine learning, robotics. Well, in order to build all of these innovative new products and services, you're going to need these rare earths. And the number one, let me just cross here, thing that we need is lithium. So I think there's some very interesting things going on there. I think you make a very good point. Very good point. But Tesla is down. Oh, check out these American flags here. Beautiful. Now, Tesla is down about 6.25% after hours. And Tesla makes up almost 2% of the S&P 500, right? Being that the S&P is a market capitalization weighted indice, Tesla makes up about 2%. We're probably going to have a red close in the S&P tomorrow. Monique says Musk also sent Starlink to Florida after Ian. I did see that. Yeah, and supposedly Elon Musk is losing a lot of money on this too. But he says he will continue to... What is the number that they're burning a month? Does anybody know? Is it $20 million? But supposedly he says he's going to keep them up. So, JR says, if we remove 80% of our energy, that is fossil fuels, where is our economic growth and innovation? It's zero. Yeah, and I think, so JR, to your point, I think many people just don't even realize how many things are made with crude. Right, think about that for a second. Think about all of the things in your daily life that is made with crude. Dr. Longest says EVs will be bigger pollutants than gas powered because of the coal use. I don't know about that. But I think there is concern, right? If everybody wants to, and we sort of reviewed this yesterday, but I think there's a good point to be made by some people in the chat that if you really want to think about all of this ESG stuff, right? And for the record, I think a lot of this, the vast majority of the ESG is sort of just like a marketing scheme by Wall Street. And that for reasons we could expand on. And I don't really want to get the chat riled up here, but I think Jamie Dimon said it best. You know, we need a sustainable plan to transition to renewables, because if you botch this, which we're botching it right now pretty heavily, by the way, you're actually going to completely backfire on yourself, and it's going to encourage or force the encouragement of the utilization of horrible, horrible non-renewable energies such as coal. Hey, Kim Grant, good to see you. It says, good evening, everybody. Hope you're well, Kim. So this is on the corner of East 17th Street. Empire State Building is looking fantastic tonight. Yeah, exploration is nuclear power. It's the cleanest type of energy we have. Joe says oiled his lots, medical gloves. Yep, pharmaceuticals, etc. But we're starting to see this big pushback though, aren't we? You know, I think there's a lot of people sort of, I don't know, maybe not inadvertently, but, you know, pulling money out of BlackRock. I think Larry Fink is going too hard on the whole ESG thing, because I think at first it was just a way to attract AUM, right? Because Wall Street, the only thing that, well, I wouldn't say the only thing, but a big thing is to attract AUM, or assets under management. Because the more assets you have under management, the more fee income you could generate. So that is why you'll have a lot of these, you know, ETF issuers spin up these ESG and environmental ETFs. But when you actually do some digging into those ETFs, you'll find that it's pretty much very highly weighted towards like a basic S&P 500 index fund. And then if you look, you know, 20 stocks down, it'll have a couple solar stocks in there. But the top stocks is Apple, Microsoft, Google. And again, just because you put a fancy ESG name on the ETF, they could bang you over the head for, you know, 200 basis points in management fees. But I think a lot of that stuff is starting to unwind, as we've been talking about. So I wonder what they're doing under here. They have big wooden planks down here on 5th Avenue. We are going to be walking down to, you know, I'm actually not too sure. Maybe we'll make a right on 14th Street and head over, or maybe we'll start to head down towards Soho. We'll see. But I want to talk about some key levels, because I think this is very important. Because number one, the debt market is very illiquid right now. We saw that 10-year Treasury yield get bid up like crazy today. The US 10-year bond selling off. And now we have a major component of the S&P 500, Tesla, that makes up 2% of the entire indice, getting hit after hours on earnings. I think it's down about 6.25%. So if we continue to have this big sell-off in the debt market, and we don't have any intervention, like if we think about what happened in the UK, when the Bank of England had to intervene and start buying gilts, because the yields on those gilts were spiking and causing pension funds to have massive amounts of margin calls. I think we could potentially see a big drop in the market. Man, it's so windy. But this is the New School. It is a very famous design school here in New York City. Hey, Jared Covey is here. Good to see you. Hope you're well. Victor is here. Says hello, Tom. Saludos from Argentina. Good to see you, Victor. Thank you for joining. Hope you're well. Hey, Maria May says ice. Craig is here. Says hey, Tom. Good to see you, Craig. So I want to ask you guys, so since tomorrow we're going to get some big housing data out, we're going to hear from the National Association of Realtors on existing home sales data. Do you think that the United States is turning into a quote-unquote renter nation? So do you think the United States is going to go the way of pretty much every other country, especially countries in Europe, to become a renter nation? We'll talk about that. Speaking of Tesla's earnings report, look at this Tesla. This is a very unique color. Look at this. It's like an electric green. Very strange. Tariq says, Tom, I think Tesla is going right back up tomorrow on Friday. Why would it stay down? Everybody that's sold off, do they think Tesla will crash and burn? I don't know. I mean, I think that, you know, in a rising interest rate environment, maybe the valuations, could be a little bit frothy. I also think, you know, I was listening to the earnings call, and Elon Musk sort of warned about 2023, saying that there could potentially be, you know, a huge economic downturn. That's sort of why they are hoarding cash and sort of putting off their buyback. But we'll go into a deeper dive of Tesla tomorrow, because the earnings call was just so erratic that I want to really do a deep dive into it. Noco Dave, thank you so much for the $5 donation. Says, hey Tom, my great-grandfather was a mason who worked on the Empire and the Chrysler Building. Whoa. I'm in Colorado and don't get to visit often. Thank you for doing these walks. Wow, that's awesome, man. That's fantastic. Well, hopefully you could make a trip to New York City very soon. But that's awesome. So your grandfather worked on both the Empire State Building and the Chrysler Building. Now, those are some of my favorite photos. The very iconic photo of all the iron workers sitting on the ledge of one of the I-beams when they were building the Empire State Building during the Great Depression. That's fantastic. Thank you so much for being here. Dan's future's already down 1%. Yeah, I think it's just a risk-off environment. I think it's a risk-off environment. I mean, yeah, I sort of don't want to go on a tangent, but I may have to. Dusty Cole says, love those pics too, Tom. Thank you so much, Dusty. Yeah, Monique says they're very iconic photos. Agreed. So here's my main concern, right? Now, everybody is forecasting a recession. In my personal opinion, we're already in one, right? I just use the basic understanding of 2 negative quarters of GDP, which we got. I don't really, not to argue about it on stream, but if we go in, if the experts, quote unquote experts, officially call a recession, and which I think they will be forced to do, reason being, does anybody notice what's going on in China right now? China actually refused to release their GDP numbers. Now, why do you think that is? Do you think that China refused to release their GDP numbers because everything is so fantastic? Like, the numbers are so good that they just don't want anybody to know? Or do you think the opposite?
I'll stay there for 20 hours.
I don't know. I think I have my opinion on that. So if we do go into a recession, do you think that the demand for Teslas are still going to stay elevated? Now, I would actually say maybe. And that was proven by today's earnings report. But I think once you see a material tick up in layoffs, because that's really what we haven't seen yet. The unemployment rate is still 3.5%, right? People are still employed. We've been seeing a little bit to the tune of people getting laid off, but we actually had the unemployment rate drop from 3.7% to 3.5%. But once you start to actually see people losing their jobs, that's when I think you're going to start to see the real sort of reining in on the spending, in my view anyway. Tariq says most Tesla buyers could be buying cash. Ally might not be seeing those loans. That's true. Noco Dave says, Tom, people have more money now than they ever did before. Sure, milk is a little bit more expensive, but look at tech products. That's actually a good point. Let me see who said that. Sorry, I'm just adjusting to the cold temperatures. So usually I've been wearing my glasses now, and the glasses are fogging up. But yeah, so technology in and of itself is by definition deflationary. I mean, just look at what we're doing right now. My cell phone it's essentially a supercomputer. It's an extension of yourself. It's my TV, it's my telephone, it is my computer, right? And that's all of those products. It's my tape recorder, it's my camera. It's all condensed into one device, right? Back in the day, if you wanted to get all of these services, you'd have to buy a desktop computer. You would have to buy a camera. You would have to buy a video recorder. Remember those? You would actually have to hold the massive video recorders on top of your shoulder. Does anybody remember that? So to your point, yes, technology in and of itself is extremely deflationary, extremely, which is good. And I think that is one thing that Tesla has going for it, is that over the longer term, the prices of these Teslas are going to come down once the gigafactories could really start to operate at 100% capacity, maintain their gross margins, and the like. Hey, Daniel, thank you so much for the donation. You are too kind. Thank you so much, Daniel. I appreciate the support. We are now here at Washington Square Park. To your point about Americans having more money than they've ever had, I would say that is technically true. So the cash balances that many American consumers have are still relatively robust. And we found that out by listening to the earnings calls of all the major banks, right? Jamie Dimon said the same thing about his deposits. Customer deposits remain robust. Brian Moynihan, the CEO of Bank of America, said the same thing. And to your point, we're not even seeing an uptick in delinquencies on credit cards at all. Long-term delinquencies, which is about 90 days plus, maintain their levels, some of the lowest levels pre-pandemic, so even before the coronavirus. So I think you do make a good point. Hey, son, photos from around New York is here. Good to see your photos. Welcome. MG11 says, love your walks. Thank you, MG. Good to see you. So we are now in Washington Square Park. This is on the campus of NYU, New York University. Not too many people out in the park tonight, though. Well, I guess technically it is a school night. Technically, right? Zach Drew says cryptos and futures are moving. So speaking of Zach, I think you bring up an interesting point. So I posted a chart earlier today of Bitcoin on my Twitter at Walks Wall Street, if you want to follow us over there. This price action is very, very reminiscent of, I believe, November of 2018. Now, does anybody remember November 2018? We had about a 3-week period. You could see the Empire State Building under the arch, by the way, right here. We had about a 3-week period, maybe a little more, where we had extreme volatility contraction in the price action of Bitcoin, and it consolidated within like a 2 to 3% range right below the 50-day moving average before it blew wide open and did the final flush or capitulation, as I like to call it. We're seeing like the same exact thing right now. You see price action consolidating just below the 50-day moving average. And our intraday ranges have been, or I would say like a weekly range has been maybe 5 to 10%. So I think we may see a big selling event in Bitcoin. Tin Man is here. This is good evening, Tom. Good to see you, Tin Man. Yeah, Zach Druce's was about 6K forever. Betsy Gonzalez says, hey Tom, savings are up because people are afraid to overspend due to the recent events that are happening. That's maybe a good point. It's actually a good point. Maybe you're right. Maybe you're right. Now, we did get some important economic data as it relates to housing starts. And here's why I think it's very important that we sort of cover this and talk about this. This is a good coffee shop across the street, by the way. Irving Farm, very good. So housing starts fell 8.1% to 1.439 million units last month. And in addition to that, August numbers were actually revised down. So we had housing starts decline, and then we had the numbers from prior months revised further lower. And here's why that's a problem. Obviously, if we think about some of the reasons why housing starts are down materially, I would say the number one the driver of that is higher rates, higher interest rates, lower demand for people. You may be putting in orders for new single family housing. But here's why I really wanted to talk about that, because in the same report, it's actually driving demand in the multifamily space. So this looks like a vegan restaurant. Hummus vegan falafel. Very interesting. So here's my question for the chat. In this environment, is America slowly but surely becoming a renter nation? Because I wrote down just a basic, and I tried to make it nationwide standard, because I think some of the examples I could give here are very, I would say, tone deaf towards the rest of the country. And here's what I mean by that. Here in the New York metropolitan area, if you go out to the boroughs or Nassau, Suffolk County, parts of New Jersey, even upstate New York, a regular single family home could go for like $750,000, right? I would say $550 to $750 is sort of that range. I don't really think you could find a decent piece of property for $350,000. It's just not going to happen around here. However, in other parts of the country, you can, and I understand that. So, at the current interest rates of 7%, let's say if you were to buy a $450,000 home, okay, and you saved up down payment. So 20% of 450, 90 grand. Okay, so you're able to put $90,000 down on the property, but interest rates right now are 7% on a 30-year fixed rate mortgage. You kind of almost fell. So judging based upon that, your monthly payment, not even including the taxes and the insurance and all that nonsense, your monthly payment would be $2,395. That's a $450,000 home. You managed to put 20% down at a 7% 30-year fixed rate mortgage. $2,395 is your monthly payment. You want to know what the payment was this time last year on the same exact house? $450,000. You put $90,000 down at 20% at a 3% fixed rate. Well, just do the math. It's about $1,500. Okay, so $1,500 versus $2,300. Okay, and again, that's not including the taxes, the insurance. With all of that, I mean, you could have mortgages for your whole payment 3,500, 4,000. It's not going to happen. So the point I'm trying to make is, since as of right now, housing prices have not really come down yet, right? Now, I'm not making the argument that they won't. I think they will, but they just haven't come down yet. So that's forcing almost everybody into the rental market. And you're starting to see all of the crazy activity that was happening in the single family housing market as it relates to buying spill over to the rentals because nobody could afford to buy a place. So my question is, do you guys see the United States over the long term seeing millennials, Gen Zs totally priced out of ownership? And do you think we'll see renters in perpetuity? Or do you think that's a little bit too stretched? I'd like to know your thoughts on that, because a lot of people I'm talking to are split about 50-50 on that. Yeah, Victor says the cost is extremely high. Rachel Abraze is true. Ren10 says Tom, no. Look, I mean, maybe you're right. Maybe you're right. JR says yes, renters. Andrea says you can still buy a house for $200,000. So I understand that, but Andrea's like, let's say if in the world of New York City, right? Let's say if you work in New York, you have to commute to the city. You cannot buy a single family home in commuting distance to New York City for 200 grand. Right now, could we all agree on that? I mean, maybe if you buy someplace in Pennsylvania and you commute like 2 hours each way, maybe. But I mean, near any big city, right? Miami, Florida, San Francisco, Houston, you're not getting no $200,000 house. Yeah, Edwards has defined commuting distance. I would define commuting distance by I'm gonna give a little bit here. I'm gonna say an hour and a half drive each way. I want to show you guys this art exhibit here. Mr. Shea Butter says it's true, but unaffordability will create chaos in the future. Noco Dave says sensible folks will be on the fence, right? It's tough. My family lives in Huntington and commute to the city. Yeah, so I'm very familiar with Huntington, Long Island. Yeah, you definitely can't get a house in Huntington for 200 grand. Maybe 450, 600? JR says it's impossible for 200K in a metro area. Yeah, so I think we're about split here, but the data is actually, so as we got the housing starts data here, and there's actually been more permits as we had permits data out for single family housing. For multifamily. And developers are continuing to build multifamily developments in this environment, even as interest rates are going up, because rents have doubled, right? So they could still make money off of multifamily housing units because rents are stratospheric. So if the only type of housing that we're building is multifamily, I think we could potentially have a perpetual shortage of single family homes. Now, again, this is a very opinionated, but that's what I think may happen. Got Yours says, why does a millennial need a house? A lot of them don't want to get married or have kids, so they have no reason to buy if they don't want to buy a home. Well, that's another good point, right? I think those are all interesting conversations to have. You know, maybe we're just shifting to an environment where millennials and Gen Z don't want to have home ownership. Maybe they don't want to own things. Maybe. Patrick New York is here, says, hey Tom, good to see you, Patrick. Trust you're well. Gregory says, good evening all, just finished office hours. Gregory, good to see you, my friend. We are here on Prince Street headed towards Lower Manhattan.
I'm very sorry about his name.
Zabatata says we'll probably be from renting to building a spec home in order to move there. Well, I understand the wants and needs of millennials and things like that are changing, and I understand that. But I think if you look into the future and you sort of look at the data, I think I've said this before, out of all first generation millionaires in America, right? So think about a first generation millionaire that didn't inherit any money or things like that. They didn't get it from their parents. Their first 1 million is made up majority of net worth or equity in their homes, right? Apartments, whatever they own. So if you have a generation that is just renting in perpetuity, well, I think it's going to be harder for them to build wealth. Right now, I know real estate is not the only vehicle to do that, but if you sort of look at the data now, it shows that the vast majority of people who are first generation or who've made a net worth of $1 million without inheriting it from their parents or anything like that, the vast majority of that net worth is in the form of home equity. Look at this thing. What do you guys think of this? I think it's pretty interesting. Hey, we got the FDNY. Awesome. Hey, Annette. Says, hey, Tom, I'm just discovering this channel and I like it so far. I moved out of the city because I got tired of the rat race. Wow, it's a big fire engine there. Oh, so you moved to upstate New York. Very cool. In Schenectady. Love that. Yeah, I think what could be an interesting, and I've sort of said this before, but, you know, what I do and what I did is, I think you'd still want to own things, right? I think that is the best way to go, but I would go the house hacking route, right? So if you're going to buy something, if you just look at what your budget is for renting, I think if you sort of suck it up, you know, maybe we'll go this way and say, look, I'll live with roommates for 5 years to save money. Well, why don't you buy the piece of property, right? Whether that be a duplex, triplex, something like that, or it could even be a single family home that you rent out the individual rooms and you have your tenants / roommates help you pay down the debt on an asset that you own, right? I think that millennials and Gen Zers, is that a thing, Gen Zers, are going to have to get a little bit more creative in order to try to move up the ladder, so to speak. So that's what I would do. I think ownership is still very important. Let me go this way. And I think in order for people to do that sustainably, I think they're going to need to go the house hacking route, which is a very, very good route, especially if you're young and you don't have any responsibilities or kids. Annette says, tons of land, and I'm considering getting shipping containers and build a home in Vermont. Now that's interesting. I've never heard of that one. Interesting. JR says, home ownership is a great way to build equity, sell it, and flip that into a business venture. Yeah, now I think, and I'm seeing a lot of the comments in the chat. I'm just moving a little bit more slowly tonight because it's cold and I don't think my body's used to it. And my glasses are fogging up for some reason. I think we need to sort of define what the asset and liability is. I think in this environment, if you were just going to buy a single family home at 7% interest rates and not wait for home valuations to come down, I think that's a horrible, horrible idea. But where it could be a very good idea is in Q1 or Q2, and again, this is speculation, when I'm sort of expecting those valuations to come down, I think it's still a good idea to buy a piece of property as long as the piece of property provides you with either some sort of an income or it allows you to live for free, right? I think that's a good idea. Because if you're gonna live in, a big city or something, maybe you could look to a suburb of that big city and say, all right, instead of spending $3,000 a month on renting somewhere, maybe however the deal works, right? You got to run the numbers. But let's say if the mortgage with everything and the taxes, the insurance comes out to $3,500, I would do that deal if you can generate $3,500 to $4,000 a month in rent. Maybe have a little bit longer commute, but at least you're building equity in an asset that you're actually not really paying for. You're just having the tenants pay that debt off for you. Hey, Sunshine, New York City says, ooh, it's 51 degrees. It's colder where I'm at. Yeah, for some reason it feels very cold out tonight. It kind of feels nice, not gonna lie. Good to see you, Sunshine. Steve CR says, when buying property, look at yearly property taxes, every year expense. Steve CR, that's a very good point. Andrea's Alpha says, what about spending $250,000 on an Ivy League MBA? Yeah, I mean, if it's gonna make you more money, you just gotta run the numbers, right? If you going to an Ivy League school and getting an MBA is going to put you on a career trajectory where maybe you're a CFO or a CEO down the line making millions of dollars, then yeah, do it, 100%, 1,000%. But most people, well, I'm not gonna say most, a lot of people that do MBA programs have their company pay for it for them. Now again, if you're not making any money and you're unemployed and you're saying, oh, I'm just gonna go get an MBA for the sake of getting it, no, probably not. But I think everything has its place. Wow, look at this. The wall of liquor. Hey, Ryan Beck is here. Good to see you, Ryan. This is a beautiful night in the city. Yeah, things are cooling down, but the good news is this weekend it's supposed to be like 70 degrees. Happy about that. Joe says, me personally, I prefer to just own a small condo in the city to live quote unquote cheap while saving for a house to build some equity. Yeah, I think that's a good idea. I just think things are going, I think that Gen Zs and millennials sort of get the short end of the stick, because a lot of people say, we have it so easy. But I would actually argue, these millennials and Gen Zs out here, they're troopers. Think about all of the craziness that they've lived through. Many people that are millennials graduated right into the worst financial crisis of our lifetime, right as they were sort of getting their life together. Then we get slammed with COVID, right? I would say they probably experienced more market volatility than any other generation. It's very interesting. I think it's a good conversation. Very interesting. Hey, Kitchen Lab is here. Says, hello there, Tom. Hope you're well. Good to see you, Kitchen Lab. I'm doing good. I hope you're well. Zach Drew said, we have the worst inflation. The dollar is worth puke and inflation is crazy. Yeah, so that's another thing. The Dixie is very, very strong, right? So one of the issues for emerging markets right now, as we cross Dominic Street, is that the Dixie or the dollar is extremely, extremely strong. So a lot of emerging market countries with a lot of dollar-denominated debt are really, really taking a beating here. So this is the entrance to the Holland Tunnel. Man, it is so windy out. Can you guys hear the wind in the mic? You know, these are some really nice apartments. Look at these. A lot of new buildings coming up here. Hey, Tim, thank you so much for the support. I appreciate you very much. Gott's Gen Z are awesome. I think they'll do well. It's the millennials I worry about. Hey, Michelle McGraw's here. Good to see you, Michelle. Yeah, I think we may have to head deeper into the city because it is extremely windy. My gosh. I think tomorrow I'll have to go to the Apple store to get the microphone again, or the dongle. So here's the negative thing about Apple products, is that it has no headphone jack. So in order to plug in any type of external mic, you got to spend like 20 bucks on that little dongle that's going to break in like 15 days. Yeah, line sync is like wind in the mic loud and clear. John says, Tom, why do you think rent is so high everywhere? Well, we sort of predicted this during the pandemic when they were doing a lot of these forbearances, right? And unfortunately, a lot of landlords got burned by this. And I said, anytime, pretty much 9 times out of 10, when the government tries to enact a program to help the people, it winds up doing a complete 180 and blowing back in their face. And what I mean by that is, a lot of the landlords I know and I talk to, some quite large landlords, they would rather sit vacant on some of their units than rent it to a person that could potentially be at risk for not paying, right? Especially in states like New York, where the renter laws are very friendly towards the renters as opposed to the landlords. You know, a lot of mom and pop landlords have been getting stiffed. Now, I know this is a very, very hot button issue, a hot topic, but I'm just giving my opinion on it. And this has caused a lot of landlords to quote unquote make up for lost rent. So once they can finally evict the person who stiffed them for 2 years, they're like, look, I'm just gonna bang the next guy at 100% rent increase. And let's say if I had maybe 2 vacancies in the building, I'm just gonna leave them vacant unless I can find somebody that 100% makes 40 times the rent, has a good job. I'm not gonna give anybody any sort of leniency. You gotta have a pristine credit score, nothing bad on your credit report. So there's gonna be no more leniency. I think a lot of these forbearances created an environment of extreme animosity towards the landlord and the renters. But check this out. This is a beautiful, beautiful shot of the One World Trade Center. But a lot of the landlords have a bad taste in their mouth and they're scared. And so are the renters. And I think it's negatively affecting renters because, you know, everybody goes through hard times in their life, okay? Everybody loses a job. Everybody gets laid off at least at some point, right? Everybody, you know, falls on hard times, maybe misses some bills. Like, that's normal life, okay? That's normal life. I think it's probably happened to the majority of people watching this stream. That's just life. But unfortunately, I think even if you have the slightest hint that you're going to be a bad renter or that you may not pay the rent, absolutely no way you're going to qualify. So I think it's a combination of basic supply and demand, right? We've seen over 100% increase in interest rates. So all of the people who are looking to buy houses because interest rates were artificially suppressed, they can no longer afford to buy those houses, right? We just reviewed this. You know, $450,000 house at a 20% down payment, at a 7% interest rate, is almost a $3,000 monthly payment without even the taxes or the insurance. So all of those people are now forced to go into the rental market and compete with everybody else. So the demand for rentals is sky high. And that's exactly what we saw in some of the housing data today, where it showed that a lot of the single family housing starts are absolutely falling off a cliff. But where we do see some robustness here is in multifamily housing. So some developers are still willing to make the investment to build multifamily units, because even at a 7% interest rate or whatever debt they may acquire to build that property or get the property, they could probably still make money because rents are so high. They can command very high rents. So this is Grand Street. Maybe we'll make a left down Grand Street to avoid some of the wind. This is a beautiful neighborhood here, by the way. Joseph Hardaway. Hey, good to see you, Joseph. Says I would probably have months to a year saved up on rent. Gina Thomas says, Tom, I think you're wrong. Yeah, look, I could be wrong. I could be wrong. I'm definitely not married to one type of opinion. Well, look at this place. This place is really nice. James Tigers says Bank of Japan announces emergency bond buying operations. Yeah, it seems like the BOJ is the only central bank that is not going along with quantitative tightening. Still easing. Look all the way in the distance here. This is One Vanderbilt. Beautiful building. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. Yeah, Dusty Cole says nice, clean looking place. Yeah, it's a pretty nice neighborhood. We're actually going to come up on the intersection here where there's a lot of very nice restaurants. I think they're all closing up though. It's only Wednesday night, so usually Thursday, Friday nights are the busy nights down here. This is one of the most unique buildings, I think, in New York. Check out this building. Hey, Billy is here. Says, hey, Tom, I'm happy. My landlord extended my lease for the next 18 months and didn't raise the rent. Great timing for a potential rental crisis. That is great timing. Thank God he did that. So this is West Broadway. Billy, good to see you. Zabatata says Japan has been in stagflation for 30 years, so their logic is kind of right, but I'm suspicious. Yeah, well, I think it's also population declines too. That is been a really, really big issue for Japan. And that's actually where I agree with Elon Musk 100%, because if you have, I think that the number one risk to declining GDP over a long period of time, in my view, in the United States, is population declines. And as of right now, for reasons we've been talking about on this stream, you know, you can't buy a house, you can't really afford to own anything, so people can't afford to get married and have kids, right? It's a big issue. So, wow, look at how unique this thing is. Let me give you guys a shot of the lobby. This is probably one of the most unique buildings I've ever seen down here. I wonder if these are balconies. You guys think these are balconies, or you think that they're just the design? So here's one of the things that I think that our government needs to be proactive in doing. And this is something that I've called for quite some time. I think we need to open the window, so to speak, and let in a lot of H-1B visa, applicants. Because right now, in order to, let me just rephrase this. There's this notion that it's so easy to come to the United States and to work here. It's such a false narrative. It's extremely, extremely difficult if you want to do it legally, right? If you want to come here and work here legally, it's a nightmare in hell. Excuse my language. So, if we want GDP growth in the United States, which I think, selfishly I want, I'm an American, I think this is the greatest country in the world. Selfishly, right? Apologize for any of the other maybe non-Americans in the chat when I say this, but I want all of the best and the brightest people from all over the world to live here. I don't want them to live in Canada or anywhere else, right? I think that's just selfishly being an American. I want the best and the brightest minds to be here and build businesses here. And I think if you were to speak to a Canadian, they would tell you the same thing. They want the best and brightest minds in Canada. So I think in order to solve for that crises that I see on the horizon of people not having kids, we should be very, very aggressively pursuing extremely, extremely smart, educated, and talented immigrants. And that starts by opening the window, so to speak, on the H-1B visa program. But right now, just to give you some context to where we are, this is the corner of Broadway and Canal Street. So if we continue to walk down Canal, we will run right into Chinatown. Maybe we'll walk a little bit further down here. But this is the sort of main drag here that'll take you all the way to Manhattan Bridge. Canal Street cuts all the way across the island. Joe says, honestly, Canadians moved to America to make more money. We have a brain drain problem. Yeah, and I think that's what the United States, that's why the United States it will continue, in my opinion, to be an economic powerhouse in perpetuity. Because people want to come here, right? People want to come here. When I went to college, the biggest eye-opening thing for me when I went off to college, I'll tell you guys, but first, check this out. This is very cool. I like all of the original sort of cobblestone streets down here. The biggest eye-opening thing for me, and maybe this is just because I went to school in New York City, right? Very diverse place, is the amount of international students that I went to school with. Like, it was really just mind-blowing. And every single one of them was talking about ways that, I want to stay here and work in the city, work in the United States, every one of them. But none of my American friends ever tell me, I want to leave the country and work somewhere else, start a business somewhere else. But it's always everybody else wants to come here. And I think that's what's made America fantastic and will continue to make America the superpower, the undeniable superpower of the world. We want the smartest people. But the problem is, for reasons we just discussed, very expensive in the United States. Healthcare, very expensive. It's a disaster. I think we could have an entire stream about that. Healthcare costs, medical costs here, extremely expensive. So Americans are not having kids and starting families. So in order to make up for that lack of people, I think we need a more robust program to attract and approve more swiftly H-1B visa recipients. What does this say? Interesting place here. Mike C says, I think I'm thinking of dropping dental insurance. It's too expensive. Well, I think you just have to run the analysis, right? Like, how many times, like, realistically, do you think the average American goes to the dentist? Maybe once a year? Maybe once for, like, a cleaning? DN says, I'm American and I don't have health insurance. It's a sham. Insurance is our scam. Yeah, well, I mean, the thing, I guess the benefit, right, of having health insurance is, you know, if you get, you know, clocked by a bus, you're not going to go bankrupt, right? I think that's the benefit of having some type of health insurance here is for, like, the big things, like, God forbid you get in an accident or something bad happens. Hey, Cleanup says, hey Tom, I am a dentist. Dental insurance, if given by your employer, is great. Self-paid dental insurance is not worth it. Wow, we got a dentist in the house. Awesome. Well, thank you for that. So how often, so your clients that you have, since you're a dentist, you'd probably know this more than anybody here. Would you say the average American probably goes to the dentist, what, once a year? For like a cleaning, right? You go once a year, you get your teeth cleaned. You know, maybe if you have a cavity or something, you have to go back. Or is that too high, do you think? Wait, hold on, I'm trying to think about this. Do you think that's too high to say the average American goes to the dentist once a year? I don't know. Cleanup says, I am Canadian, but I think Americans are similar. People who have insurance visit regularly. People who do not only come in for emergencies. Yeah, it makes sense. NJB says, health insurance should include dental. It's very important. I agree. I think if there's one thing that you could probably drop is eye care, like your eye insurance. But for me, I actually go to the eye doctor more so than I go to the dentist. That's just because my eyes are terrible. So I have to go quite often. Interesting stuff. Whoa, Brad's Brains says, my root canal and crown last week was $1,200 out of pocket. Jeez. So I'm assuming that's without insurance? It seems like a lot. Well, you know, talking about fiscal responsibility as it relates to like US deficit, things like that, you know, I always revert back to that Paul Tudor Jones interview, right? And unfortunately, one of the biggest, I would say, burdens in the United States is healthcare expenses. Unfortunately, because statistics show that America is a very unhealthy country. So I think the best thing that you could do over the long term to save money, right? Because usually like real big healthcare expenses start to kick in, I would say, once you're approaching retirement age, right? I would say maybe even in your 50s. But if you're young, 20, mid 20s, you're probably not going to the doctor all the time. You probably don't have things that are wrong with you, but as you get older, you do. So I think over the long term, if you want to reduce a major expense, that would be just to be extremely healthy, eat healthy, get exercise, because those health ramifications down the line could be very expensive to your pocket and also very burdensome on the system too. You know, I had a conference call with a CTO of a very large healthcare org. I won't say which, but they're making extreme investments, very, very aggressive investments into remote patient monitoring. Because the number one thing that they're trying to do, right? So a lot of the times when I talk to my clients, customers, their goal is to reduce the hospital remittance rates. Right, so let's say if you are a patient of a home health care organization or something like that. Now, the goal is for that patient not to return to the hospital, right? So you have in-home care, things like that. Is it just me, or are you noticing more horn honking and aggressive driving lately? I think these people are all bent out of shape. Anyway, it's clanging and banging everywhere here tonight. But the main goal, and I think it's true, is to reduce the amount of patients that are going back to the hospital for things that are highly preventable, right? So I'll give you an example. As you get older, you know, you may be more forgetful. You may forget to take your medications or something like that. Let's say if you forget to, you know, take your high blood pressure medication, and then that forces you to go back to the hospital. Well, what's more expensive? $30 a month or $40 a month for a remote patient monitoring service where it can in real time monitor the patient, check their vitals in real time, remind them to take their medication, a reminder to administer insulin for a diabetic, whatever it may be. Or if you don't have those RPM services, what could potentially happen is a patient forgets to administer medication, which leads to a very, very preventable big issue that leads to them having to go back to the hospital, and those hospital bills are extremely expensive. So every sort of CTO I talk to in a big, like primary care physician, home health, assisted living, they're all trying to deploy these remote patient monitoring services to try to get government subsidy. So if they show the reporting to the government and they could say, look, by deploying these RPM solutions, we have reduced the hospital remittance rates by 20%. So the government should provide subsidy for paying for these RPM solutions, something like that. Hey, Herbert, thank you so much for the $5 donation. Herbert says, Tom, I have dual dental coverage. I just had a crown and it cost me $30 out of pocket. I believe dental insurance is too expensive for most people. Well, Herbert, thank you so much for the donation, and also thank you for sharing that. Hopefully everything went well with that. Hey, Line Sync, good to see you. Hey, Bourbon Buddy 1, what's up? Says, would you rather have higher taxes or quote unquote free healthcare like we do have here in Canada, or do you prefer the American way? I think that's a good question. Now, I'm not Canadian, so I can't really speak to that. Now, maybe you could provide some insight. Here's, from my research and from some of my Canadian friends that I went to college with, this is what they say. And let me know if this is true or not. In Canada, it could take a very, very long time for you to get seen by a doctor, as opposed to the United States, where it's rather instantaneous, right? So do you think that there is a material difference? And again, I'm not Canadian, so I can't speak for this. But for those Canadians out there, is there a material difference in wait times for somebody to see a doctor, physician, whatever, than in America? Or would you say that is a myth? And I'm genuinely asking for those Canadians out there. Because if that's the case, I think it's undeniable that the quality of healthcare, like here in New York, the best doctors in the world are here, right? Some people get flown in from all over the world to have surgeries here at like NYU. Okay, so Bourbon Buddy says the hospital is immediate. Dan says, I'm a Canadian and it can take up to 10 hours at the emergency room. Well, that's pretty immediate to me. JR says Canadians come here because they can't be seen. Yeah, so, and again, I'm not trying to be like, you know, play dumb here, but it always seems to me when we have this conversation of, you know, single payer system like they have in Canada, and the system we have in the United States. In the United States, it seems like everybody in the US will say, oh, the wait times in Canada are horrible, right? But I really want to hear from the Canadians. So far, it doesn't seem like it, but again, I don't know. I would probably argue that the quality of care is better here in the United States, but maybe that is also a stretch. Spencer says lots of people come out here to Stanford University Hospital for the care also. Bourbon Buddy says it's a myth. It's fantastic, but my friends in the USA don't want to believe me. Well, I mean, we heard it right from you. I mean, I think that's who we need to be hearing it from, right? Is a person who actually lives in Canada. So this is the entrance to the Manhattan Bridge. But if we pan the camera over a little bit more, you'll see the One World Trade Center. That's a fantastic view here. Carter says, I don't know who the hell up here in Canada can afford to go to the United States for treatment. So I will say this, if you are in the United States, avoid going to the emergency room at all costs. I mean, that is, you're just begging to get hammered over the face. You're gonna get blasted if you go to the emergency room. That's a massive bill. Massive, massive bill there. I had to go to the emergency room once. Now, granted, I had insurance, but the total, and they did nothing. Like, literally, they did nothing. Like, when I say quite literally they did nothing, it was nothing. I think they gave me like some Tylenol. They checked my temperature and they sent me on my way. I think the bill was like $9,500. Now, granted, we had insurance, so I think we paid maybe $100. But somebody's paying that, right? You know, the insurance companies are paying that. And I think that's why the cost of health insurance is so high. Hey, Roxanne Robles is here. Good to see you. Welcome, Roxanne Robles. Jay says, Tom, it took me 3 months to see my heart surgeon. Yeah, I don't know. I'm not an expert in sort of the logistics of healthcare versus a single payer system. But what I can tell you, and what the solutions that I've sold and I continue to sell, those are the big problems, right? Especially as it relates to home care. And, you know, reverting to the beginning of the stream as it relates to, if we want to tie this back into investments, I think the number one thing is to look at the thematics, right? What are the big themes for the next 10 years? And the fastest growing population in the United States is the elderly. And the elderly are going to need care. So I think there's going to be a lot of money to be made in home health care in the United States. This is the, just quickly want to show you guys, this is the Fdny fire station in Chinatown. They're called the Chinatown Dragon Fighters. This is engine company 9, ladder 6. Hey, Roxanne Robles, thank you so much for the $5 donation. Appreciate it. It says buy yourself a coffee. I definitely will. And, you know, one of the main things with home health care is, at the end of the day, elderly people are better off aging with dignity in place in their homes, in the comfort of their home, as opposed to, you know, a nursing home, assisted living facility. And we want to be able to provide them with that opportunity to do that. And I think through technology, specifically remote patient monitoring, the expansion of access to good home health care, so visiting nurses, visiting RNs, it'll give them the ability to do that, right? I mean, maybe I'm just speaking for myself, but I would rather retire and age in place in my house than, you know, be forced into a nursing home or something like that. And now with different remote patient monitoring and telehealth, as those solutions get readily distributed through the United States, I think it's going to afford that opportunity. But it all starts with proving to these insurance companies and proving to the government that these solutions are materially reducing the remittance rates to the hospital. Hey, Melissa 2087 says, I took care of my dad and my mom since I was maybe 15. I'm 35 now and they both passed. You could not pay me to put them in a nursing home. Yeah, so again, take it from, you know, people in the chat. And I think that entrepreneurs my condolences, by the way. It's a very noble thing to take care of your parents. I would say that first and foremost. But I think technology is going to, down the road, afford a lot of elderly people that opportunity. Now, I know that T-Mobile is making a big push into these RPM solutions as the main sort of network provider. Because so I'll give you just a quick, not to hammer on remote patient monitoring too much, but a lot of the times, as we're doing these pilot programs, this is Division Street, by the way. I've never really been down here in a long, long time. There used to be a good soup place here. But I was rolling out one of these pilot programs, right, for remote patient monitoring. And we soon found out that there was a vast majority, and I'm not exaggerating, a vast majority of our patients did not have home internet access, right? Didn't have Wi-Fi. So how are these RPM devices going to securely, safely, and have the ability to backhaul to the cloud, whatever sort of EMR system we were working with, to upload the patient data to the cloud so the primary care physician can see it, right? Well, if you don't have home Wi-Fi or home internet, you can't do that. So we had to, go to the major carriers like Verizon, AT&T, T-Mobile to either have them put some sort of like a SIM card in there with very low data usage, and oftentimes build dedicated networks and deploy cybersecurity solutions such as like a CrowdStrike, which is like an endpoint security software that we have to download on these devices, sometimes on traditional phones or specific modules. But I think that's going to be a big play for anybody maybe who works in telecom to get into, healthcare vertical related sales. A lot of these IoTs, it's going to be a pretty big boom, I think. So here's another shot of the One World Trade Center. This is actually the Manhattan Bridge. It goes right over here. We're actually going to walk directly under it. If you keep walking up this way, this is the bike path. Liz says, hey Tom, maybe in 30 years everyone will be living in multifamily homes, caring for their parents themselves. Solves all the problems you talked about. Perhaps, maybe. So speaking of Canada though, that piques my interest. Now, if we think that single-family homes are expensive in the United States, particularly in and around like areas of New York, San Francisco, Miami, look at the housing market in Toronto. That is just breathtakingly expensive. Now that's insane. Wow, look at all the graffiti here in Chinatown. This looks awesome here. Hey, Abdul is here. Good to see you. Line Sink says Tom, nursing homes also in the UK, and the staff also suffer from poor pay. Why on earth is it common to pay people doing these essential, vital, caring jobs so poorly? I mean, that's another good point. Home health aides specifically, they do God's work. I think we could all agree on that. And the pay is very, very low, right? You could think about a pay scale here in New York for a home health aide worker. You could think about $15 an hour to about $20. So here's the issue. In the United States, and this is true, you can look it up for yourself, the fastest growing profession in the United States is a home health care worker. But it also that industry suffers from some of the highest levels of employee attrition or turnover. So that's another problem when I'm working with a lot of these home health care organizations. A lot of them come to me and other consultants and say, look, what are some interesting creative ways that we could increase our employee retention? Because margins are very slim. And one of the things that we've implemented that actually does increase employee retention at these home health agencies a lot, it's providing the tools that these aides need to do their job. So before, if you think about like EVV or electronic visit verification, when all of that EVV mandate rolled out here in New York, the agencies were saying to the new hires, download the EVV application on your personal device, download Viventium, HHA Exchange, all of that on your personal device, and it's your responsibility to figure it out on your own. Well, the problem there is, if you look at the demographic, right, and this is what I try to tell a lot of these C-levels of these agencies is, look at the demographic of your workforce, right? The vast majority of home health aides here in New York are either first-generation immigrants, they speak different languages, right? There's one agency that I work with here, their employee base speaks 7 different languages, between Spanish, French, Russian, Mandarin. So, and if you're expecting these people to download all of this sophisticated EVV software on their own and tell them to do it on their personal phones, well, if you're not doing your job as a CEO, you're not doing a job as a company to provide a good worker experience. So one of the ways you do provide a good worker experience is you get to know your employee. So let's say if your employee, the first native language is Chinese. Well, maybe to make the employee feel comfortable and welcome at the organization, you provide, let's say, a smartphone to them. And you automatically kit that smartphone with all of the EVV applications they need for their job, whether it's Viventium, SAN data, so they can remotely accept patient cases, clock in and out, and you provision that device in the native language that they speak, and you provide that tool for them. And you could say, look, you can use this for both work use and personal use, right? You'll have unlimited talk, text, data. You could use hotspot. So that's a multifaceted solution, right? You're giving the employees the tools they need to do the job in the native language that they speak, but it's also doubling as a retentive tool to say, now we provide you a free device that you could also use for personal use with a hotspot, things like that. That works, right? So a lot of these C-levels that I was talking to, they're like, I don't understand why my employees are only here for 3 months and then they're leaving. Well, I'm like, really? I'm like, I would leave too. You know, you're paying these people $15 an hour and you're putting all of the burden on your employees. You're not doing anything for them. You know, that's not fair in my view. So once we've deployed that solution, not only has employee retention gone up, but these home health aides have an easier experience on the job. And when your home health aides have an easier and more seamless experience on the job, guess what happens? What is the most important goal here? Is to provide the patient with the best experience possible. So when there's less time of the home health aide fumbling around with technology and getting frustrated, he or she could spend more time and energy on the thing that matters most, which is the patient. So that's been one thing that's been successful, but I do agree with you that there needs to be pay raises across the board. How that happens, how that works in logistically, I don't know. Well, a lot of people coming off the Manhattan Bridge this late. Usually there's not too many people coming here. You know what? They're probably coming from Brooklyn and going to Jersey through the tunnel. But usually we don't have that much traffic going into the city at this time. Hey, Mr. H says greetings from Amsterdam, Netherlands. Love that. Always love the streams. Well, thank you for the support. Thank you for your donation. I appreciate it very much. Love to visit Amsterdam one day. It'd be awesome. Hey, Fraser McLeod says, hey Tom, maybe travel across Canada to gain perspective. Yeah, I think, you know, I was planning on doing that, you know, before the big C, COVID-19 squashed those plans. I actually had a trip planned with my buddies to go to Canada, but then unfortunately COVID-19 put a kibosh on those plans. So I'm looking forward to get back to Canada. I'm going to show you guys something really cool. Check this out. This is a Buddhist temple. Now inside here is unbelievable. Is breathtaking inside. So one of my friends that I played college soccer with, Lou. I hope Lou's doing good. Maybe I'll have to reach out to him. But he's from China and he took me here one time. He's like, I got to take you. So I was like 18 years old and he took me here and it was so gorgeous inside. Has anybody on the streams been inside this temple? It's just like you're going into a different world. It's fantastic. So if you're a tourist visiting New York, I would definitely pay a visit here. It's breathtaking inside. It's amazing. And if you want to know where it is specifically, it's right as you come across the Manhattan Bridge. Yeah, Brad's brain is like, Tom, you got to stop using the big C word. YouTube's going to kick me off. Yeah, it's true. We'll probably get shadow banned or something. Nicholas P says, Tom, I work in telecom. Thanks for the idea. I'm going to see if I can hook up some elderly homes so they can stream 4G. That's funny. In 4K. Good to see you, Nicholas. Yeah, I mean, if I was in that space, I would be contacting the major primary care physicians, things like that, hospitals, big organizations, because they're looking to invest in remote patient monitoring now. Spencer, we're at Bowery Street. So Spencer says, what street are we? This is Bowery. We're actually probably going to have to head uptown. Hey, Line Sync says, Tom, I hope you'll go to the UK before too many years go by. Stay at least a month if you can. Yeah, I think that's It's definitely what I want to do, is travel more. Ooh, this guy got towed. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you're new. We do these live streams about 5 days a week between New York City and Miami. Hey, Julia says good night, I'll see you tomorrow. Julia, have a fantastic Thursday. Please be well. So just to quickly review the main topic for tonight, we were actually talking about housing, but I think we actually had an even better conversation about healthcare as it relates to Canada, United States. Now, tomorrow's a big day in the US because the National Association of Realtors is releasing their existing home sales data. And I think that's going to be really, really abysmal. Now, I believe the estimate is for about 4.7 million homes sold. I think it's actually going to come in lower than that. I don't think too many people are buying homes at 7% interest rates. Love is kind, says Tom. Have you ever been to LA? I've never been to LA. I really want to go to LA though. Really, really badly. So I wanted to read everybody something that a notable analyst out of Jefferies said. And this was in relation to the housing start data that we talked about before. But the analyst from Jefferies says that while single-family housing starts have collapsed due to higher interest rates, demand continues to be very strong in the rental market. Double-digit rents across the board have created strong incentive for multifamily builders to continue to build multifamily units even in light of higher rates. And so that sort of rounds out our conversation. I'm not sure I want to walk all the way up the Bowery since it's getting too late. Usually 2 blocks up is a little bit of a no-go zone, so I think I'm gonna bang a left here. But yeah, anyway, that rounds out our conversation for housing. You know, I think housing starts is a big leading indicator. Permits are a big leading indicator. And I think that, unfortunately, in the United States, people are being forced to rent, and we are becoming a renter nation, which I think could have a negative impact on personal household net worth over the coming years. Cynthia Beal says, Tom, it's 10:44. Thank you for that, Cynthia. Spencer says, starting home in San Jose is starting at $1 million. Yeah, that's nuts. Yeah, Joe. So Joe says he thinks rents are going to come back down. I think so too. I mean, I think that housing prices are going to come down. But I don't think you're really going to start to see the price decreases. Wow, check this out. Tell me that's not a good view of the Empire. Again, my thesis is that Q1, Q2 and next year is when we're going to start to see the actual price declines. Man, that is a great shot of the Empire. Does anybody know why the Empire is lit up in all purple tonight? That's a great shot. Wow, that's a really good shot. So on tomorrow's live stream, we're going to be doing a deep dive into Tesla's earnings report. I was actually going to do that today, but as I was on the Tesla earnings call, there was just so much outlandish stuff being said as it relates to, Elon Musk saying one day it's very possible that Tesla could have the market cap of both Apple and Saudi Aramco combined. Now, I don't know about that. Now, not to sound like a Tesla super bear, just for some context here, my bread and butter is growth stock investing. So where I thrive, oh, rats. I thought they were getting attacked. One of the things that is, we'll wait till these cars go by. So my bread and butter is very high growth SaaS software type of companies, right? That's sort of my bread and butter as it relates to my investing thesis. So I want these stocks to get in gear, right? If Tesla's not in gear, then all the other companies we talk about, like the CrowdStrikes, the Zscalers, all of that stuff is going to continue to get crushed. So I want this bear market to be over just as much as anybody else. I want these bears to get their faces ripped off, but I don't fight the Fed. And I think we need newer leadership. Actually, there was one last thing I wanted to tell you guys. Check out XLE, okay? So XLE is the ETF for energy, and we are just emerging out of this correction, and the chart actually looks pretty good. So I may have to hit or take a small position, and the market is bad when someone like me is potentially going to buy the XLE as a growth stock trader, when the only idea that I have is energy. The market we've been getting pounded. But energy had a great day today, and the XLE is actually looking really good. Hey, SP says the purple color is because of a partnership with Sally Hansen. Wow, I don't know what that is, but looks good. Amelia J says Agent Orange is the only way to handle the rat problem. Yeah, so the rat problem in New York City is gotten out of hand. Now, here's the idea. Here's our major idea in the city. Did anybody see this? There was a New York Post article that came out. And I guess we're not allowed to take the trash out after 8 p.m. That's the idea to reduce a lot of the rodent problems we have in New York. Now, I don't know if that's going to work. We'll see, but... Yeah, Joe's like, I thought you guys were friends with rats. Yeah, no. All right, since we're going on hour 2 here, I call this Walks on Wall Street After Hours. I'm going to tell you a crazy story about rats. Now, it's not the story you're thinking about. It's not that story. I can't tell that story anymore. But I will tell you another story about rats. There was a Chipotle I used to go to. This was near Bryant. Was it near Bryant Park? Hold on. Yes, it was near Bryant Park, but it wasn't the original. It wasn't the Chipotle that's still open, obviously. The one right across from Bryant Park. This is actually a different one. Now, the one that used to be open there, it actually used to be near the Panera Bread. Does anybody remember that one? Well, anyway, I used to go there all the time, and a video surfaced that forced the operation to close down. And when the guy turned on the lights, the entire floor, and this is in the back kitchen, by the way, the entire floor, all of the stove tops where they do all the cooking, in all the refrigerators, was literally covered in rats. Like the entire place was black. And what you saw is when they turned on the lights, all the rats crawled up the one steam pipe and into the ceiling. And they had to close down the Chipotle. So I always think about that. It's a good pizza shop over here. Prince Street Pizza. You know, I always think about, what do the restaurants' kitchens look like after hours? There must be rats crawling around all over the place, and we just don't see it. But that one, somehow the video surfaced, and they were forced to close down. And I used to go to that Chipotle almost every day. Jimmy, what's up? This is rat problem. Find him, catch him. Dusty Cole says, I think I saw that video. You probably did. This was like probably 5 years ago. Hey, the one and only FredX. Good to see you, FredX. Always appreciate you being here. Dynasty Flow says, have a good night. Have a great Thursday. Already half the week is over. Fantastic. Tin Man. Abdullah, good to see you. You know, could we get a quick check on futures? You know, when I started the stream, E-mini futures were down, I think, 20 points. We were about flat. I'm curious to see where we're at now, because Tesla is down about 6.25% after hours. And I think that's going to bring down the indice tomorrow. I think Tesla makes up like 1.8% of the S&P 500. Line Sync says, Tom, battery check. Battery's not doing too good. I think we're at 10%. I think I'm going to have to wrap it up here in a minute. This is East Houston.
Correct. And that's what I'm saying.
Wow, Eyeglass Lady, really? So Eyeglass Lady is one place I worked at, canceled the janitor service, and rats came out. So an employee filmed it and sent it to a TV station. Oh my God. Oh, sorry about that.
I'm sorry.
No problem. Okay, all down across the board. All right. Now, what we got to watch more so than the stocks is we got to watch that 10-year yield. I think that 10-year treasury yield is now 4.137%. So the bond market's selling off hard. And I think if this continues and that 10-year U.S. treasury yield continues to spike, we could have some big problems here if we don't have any Fed intervention. I think we could have a similar situation as what happened in the UK, where the Bank of England was forced to step in and buy gilts. LT Prod 4.148. Okay, GOTS is NASDAQ. So the NASDAQ 100 NQs are down slightly. Joe says, do you think the EU economic turmoil over the winter will spill over to the United States at all? Now, I think what would potentially spill over, hold on, let me just turn my brightness down because my phone's gonna die, so I have to wrap. But what could possibly be a contagion effect is if the Bank of England didn't step in with QE. Well, they're, okay, I'm sorry. The Bank of England said this isn't quantitative easing, they're just providing stability. Well, you could be the judge of that. But if they didn't start buying bonds, well then yeah, that would have been a massive contagion, because these pension systems are very, very levered, huge leverage. in these pension systems because number one, they're underfunded and they need yield to keep up with all the payouts. Now we could talk about, you know, pension revisions, but at the end of the day, the reason why we're in this problem is because we don't want to have the honest conversation with a lot of workers out there to say, look, you got to put more money into funding your own pension. But that would never go over well. So instead, what we do is we just treat pension funds like extremely high leveraged and risky hedge funds where they speculate in the derivatives market on gilts in order to generate more yield. But that only works in an artificially suppressed interest rate environment. And now that, by and large, every single central bank, with the exception of maybe Bank of Japan, is doing quantitative tightening and raising rates, well, when those rates go up, that has triggered massive amounts of margin calls. So in order to meet your margin call, what do you have to do? You have to sell more assets. So that's like it creates a cascade effect. So in order to stop that, the Bank of England had to come in there and start buying gilts again. And if they didn't do that, yes, that would have been a massive contagion effect that would have spilled over to the United States. It would have been horrible. So, in essence, I think we have been in, ever since the lows of the 2008 financial crisis, we've been in a monetary experiment, right, of ZIRP, zero interest rate policy, quantitative easing, and in a debt-based system, the only way that system continues to work is with the acquisition of more debt. Once you stop that, it's game over. It's almost like a Ponzi scheme. It's really, really almost dystopian in nature. And with that, I really got to wrap up. But everybody, thank you for joining the stream tonight. I appreciate it. Have a fantastic Thursday. We'll see you guys tomorrow at 8:30 p.m. If you're new here, feel free to leave a like on the video. Hit the subscribe button. We will see you tomorrow at 8:30. So Ladder Daddy, thank you so much. JR, Sabrina Fair, all of our moderators, Tin Man, Cynthia Beal, Steve, Penelope, FredX, Love is Kind, thank you so much. Photos from around New York, Gregory Carmen, Zozo Bob, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. Enjoy your Thursday, everybody. We'll meet back here at 8:30.